Hello, I'm Mr. Ed.
He could have picked a broomstick to be the head money printer because all the job is the same. You just print money. There's an upper limit on the bonds. It's now 50 basis points, 0.5%. So when that's hit, you print more money, you buy more bonds. That's the job. All right. It's not that freaking complicated. Hey guys, Ralph here from the Endgame Investor, and today we're going to talk about Mr. Ed, the horse, or more accurately, Mr. Ueda, the Japanese horse, who they can't even agree if he's a horse, what color he is, if he's a dark horse, or if he's a light horse, if he's not even a horse at all. It's all very confusing, but he seems to be the new head of the BOJ, the Bank of Japan, as of the retirement of some guy named Kuroda, who is pretty corroded by now. And in April, Mr. Ueda will be taking over. Apparently, nobody wanted this job because the equivalent of being the head of the Bank of Japan is like being at the top of the Burj Khalifa in Abu Dhabi, I think it is, tallest building in the world, with nothing to do but jump.
Aim for the bushes.
So according to some outlets, this guy was the dark horse candidate. According to other outlets, he wasn't even a dark horse candidate. Nobody expected him to be nominated. Apparently, he was nominated because nobody else wanted the job.
Mr. Horse, today we face a world crisis. Foreign interests may be moderately optimistic, but superpower co-sponsors have left a generally negative impression in the wake of political failure. Just what is your opinion of the world situation today?
Let's see what the mainstream media says about him. This is from Bloomberg. Kishida, who is the prime minister of Japan, I think, to pick Ueda for Bank of Japan in shock as Amamiya turns job down. And we have here in the second paragraph, the decision blindsided investors who had expected longtime frontrunner and Deputy Governor Masayoshi Amamiya to succeed Haruhiko Kuroda. Amamiya refused to take the post, the Nikkei newspaper reported. So he didn't want it, and nobody else wanted it. So they picked the guy who wasn't even a dark horse candidate. And how do I know that he wasn't a dark horse candidate? Because if we go to Reuters, it says the 71-year-old, right? We're talking about the same guy, Ueda, fact box, a box of facts, if you will.
In this briefcase, I carry actual scientific facts. A briefcase of facts, if you will.
Fact box.
A lock box.
What does the Reuters fact box say? Kazuo Ueda, Mr. Ueda, who is the new Bank of Japan governor, and what can we expect from him? We can probably expect him to print money, is my guess. Japan's government is likely to appoint Kazuo Ueda, an academic and a former member of the Bank of Japan's policy board, as the next central bank governor. Two government officials told Reuters on Friday the 71-year-old is widely seen as an expert on monetary policy.
I'm not really sure exactly what's really wrong with the cable.
That's why they sent me. I am an expert.
The TV's in here.
My name is College, been expert.
Lord, you can imagine where it goes from here.
He fixes the cable.
You got to be an expert in monetary policy to know when you got to print money, which is all the freaking time. Push the button.
See this button? Don't touch it!
And Reuters says he was not even considered a dark horse candidate. In the Financial Times, dark horse, in quotes, Kazuo Ueda upends expectations for next Bank of Japan governor. Prime Minister Fumio Kishida was expected to pick a continuity candidate to be the Bank of Japan's next governor from a conventional shortlist as Haruhiko Kuroda prepares to step down after a decade at the helm of the central bank. Instead, the Japanese leader sent shockwaves across global markets on Friday following reports that he had broken with tradition, and picked an outsider to Japan's policy and political establishment. The truth is, he could have picked a broomstick to be the head money printer because all the job is the same. You just print money. There's an upper limit on the bonds. It's now 50 basis points, 0.5%. So when that's hit, you print more money, you buy more bonds. That's the job. All right. It's not that freaking complicated, but they got to make it seem respectable. Where is Japan's government bond market now? it's hitting the 50 basis point ceiling again, and eventually it's going to have to break. See, we've already broken through the ceiling twice at 54 basis points on February 8th, and then 53.5 basis points on February 9th. And here we're pushing up against it again. We're still above it at about 50.5 basis points. So technically we've broken through it again, and they're going to have to raise the ceiling back to up to 75 or 100 basis points. And that's going to create more sellers of Japanese government bonds. And eventually the big Japanese bubble is going to break, which is why nobody wanted the job. So they had to pick Mr. Ueda. Another question people are asking me these days is, Rafi, when is gold going to bottom again and move back up? Well, I don't know, but I can show you this chart. So we have this. This is open interest in the futures market versus the gold price. The gold price is in the blue bars on top. The open interest level is in these green bars in the middle here, and this is volume. I don't really care about volumes that much. So here you have the, it doesn't happen every time, but very often, highs in open interest correspond with highs in the gold price. Most of the time, highs in open interest correspond with highs in the gold price. And we see that here in May 2021. And then again in November 2021. And here in March 2022, that was the big nickel blow up on the London Metal Exchange. And from there, gold has fallen, appears to have bottomed here in September. Actually bottomed here at 1618. I think that was in early November of last year. And we had another peak in open interest here, another peak in the gold price here, a peak in open interest here, and a peak in the gold price here. And we have sold off since then slightly to around 1860 right now. But look, we're back down to just around the 2-year lows of open interest. So I will say that we are pretty close to another new bottom in gold at a much higher bottom than 1618. And from here, we'll head back up and the dollar will head back down. And 2 myths I want to dispel today. One myth is that gold is magical, that for some reason that people can't understand, it seems to maintain its value throughout all societal collapses since humanity moved to a money economy sometime thousands of years ago. Why is it that gold maintains its value over time? It is not magic. It is very simple. It goes back to the Misesian regression principle once again, that you cannot have prices that do not index themselves back into the past. So humanity, through inflation, through very different mechanisms of inflation, depending on technology. Early on, it was clipping coins and debasing coins with cheap metal, so you can increase the money supply that way because the money supply was coins. And the way you could make more coins is by adding cheap metal because there was more cheap metal than expensive metal. And that cheapened the coinage and really lowered the purchasing power of the coins by making them cheap. It's also called stealing. So why is it that gold seems to always maintain value throughout all societal collapses? And the answer is because that is how you re-index prices and re-establish a monetary economy after a societal collapse. The only thing you can do is go back to the base of the monetary pyramid that you built, knock down the rest of the pyramid. That is a societal collapse or a monetary collapse, and they usually coincide. And you go back to gold and silver. It's like asking the question, why is it that new human cities are built on top of old human cities? Well, what else are you going to build them on besides the foundation of a city, which is the ground? You can't build in the middle of the air because there's something called gravity, and it's going to pull you down again.
Like gravity.
Oh, okay. Don't get me started on gravity.
And so every time there's a societal collapse, society moves back to physical gold and silver because that's how prices are indexed in an honest way. There's no magic about it. It's just the foundation of monetary economics and money economies, gold and silver. Always has been, always will be, because of logical necessity. The price system began with gold and silver, so everything must always be indexed back to that origin point. No magic, just logic and gravity. So the message is, live in Babylon if you want, but don't build big towers. And finally, I want to address the myth that high interest rates correlate with a low gold price, or high interest rates even cause a lower gold price. That is a complete myth, and I will show you the graphical evidence of this myth and explain why lately, yes, on a short-term basis, gold seems to negatively correlate with higher interest rates, but it's not going to last. This is from A February 14th, 2018 research paper from Myrmikan Research. As you know, Daniel Oliver of Myrmikan Capital is my favorite gold analyst. And he says here in 2018, Myrmikan has argued for 8 years, or now it's been 12 years, that it is rising rates that will destroy the value of the Federal Reserve assets and therefore the value of its liabilities, a unit which is known as a quote-unquote dollar. Well, first, the simple explanation, why will rising interest rates destroy the value of the assets on the Federal Reserve balance sheet? Because the assets on the Federal Reserve balance sheet are interest rate assets, and they fall in value as interest rates rise by definition. So as interest rates rise, the value of the assets on the Federal Reserve balance sheet they are going to fall. And let's look at a graphic proof of that. This is earnings remittances that are due to the U.S. Treasury from the Federal Reserve. A negative number means that the Fed has lost money and cannot remit value to the Treasury, has no profits, has losses. This is when Myrmikan's research paper came out in 2018, February 2018, and the Fed was earning about $1.6 billion a week at that point, and it's been steady until about now, or September 2022, when exactly gold and silver bottomed. Gold and silver bottomed at the same time that the Federal Reserve balance sheet started to go into perpetual and consistent losses. And now we see, if we zoom in, the rate of those losses has been increasing. It has been about $1 to $2 billion a week, and now the pace has quickened up to last week it was 27 billion, and now it is 30.2 billion, so $3.2 billion a week now. This pace is going to pick up, and as the Fed loses more and more value on its balance sheet, gold and silver will rise. Why is that? Let's go back to Myrmikan. Second sentence, gold, having the most stable value of any substance in nature, must rise as the dollar falls. Therefore, gold naturally correlates with interest rates, as the following chart of the inflationary 1970s illustrates. Let's zoom in on this, baby. You can see here, 10-year Treasury yield is in the blue and the gold price is in the black from 1971, the closing of the Nixonian gold window, so-called, until the gold top in 1980. And this correlation continued until 1981. Yes, as interest rates rise in a bond bear market, gold price rises with it. Now, why has that not held over the past few years? The problem with the thesis, he says, is that for more than a decade, gold has been anti-correlated with rates. Note that, unlike above, the left axis is inverted here. So you see a correlation, but he inverted the axis here. So yeah, it would show the inverse correlation of interest rates and gold. Why is this happening? Myrmikan's explanation for this anomaly has been that in a world in which there are around 4 trillion, that's more now, it's like, maybe it's like 8 trillion. I think they doubled the monetary base since 2018 or something like that, demanded by the interest needed to service the $90 trillion of US dollar-denominated debt. Increases in rates intensifies the short squeeze on the dollar by forcing borrowers to hold larger cash buffers against these interest payments. The two scenarios that can break a short squeeze are either mass default, which will raise the value of gold relative to the assets on the Federal Reserve's balance sheet, and debts are written off, so the need to hold dollars diminishes, or enough supply of dollars, meaning the money printing, coming into the market, which Trump and now, what's his name, Brandon, is busy working on. And so, as the Fed has begun to lose money every week, gold and silver appears to have bottomed. Yes, there's been a little bit of a sell-off, but that is expected in order to bring open interest on the futures market down, and it has come down and is near 2-year low, so we are very near the next intermittent or intermediate or whatever they call it, the technical people, low in gold prices, and from here you'll continue higher. The bear market is over. It lasted from August 20th to September 2022. Now it's done, and we can move on from here. And what's going to happen here is that the impatient, emotional traders are going to keep saying, oh, now's not the time. They're going to go down. They're going to get freaked out. They're going to go up. They're going to say, I missed the move. And they're going to go down again. They're going to say, oh, I'm not going to buy. Just hold it. Just hold on. But some trigger is going to happen very soon, and we're going to wake up, and we're going to be in a different monetary world. And we're going to go back to the foundation. That is the foundation of all monetary societies since humans started using money thousands of years ago. It's not magic. It's just the ground floor. Go to the ground floor, and if you're on the ground floor, the entire pyramid of everything that has been built since 1971 or 1933 will fall into that ground floor, and that will be the transfer of wealth of the end game. And then we can be in charge and build a stable foundation from here on out. This is Rafi, the Endgame Investor. If you enjoyed this video, consider signing up for a free 2-week free trial of the Endgame Investor, or become my patron on Patreon, where you will get a weekly biblical themed video on monetary and economic policy topics. Last week, we dealt with why the Bible does not prescribe a given form of government, but only tells you what the laws should be, because giving divine sanction to a government is a really bad idea.